Senator Cortez Masto from Nevada.
Thank you. Thank you, Madam Chair. Thank you to both you and the ranking member for having this hearing. It's so important. I really appreciate the comments from the panel members today and all the good work that you're doing. Let me start, Mr. Holzclaw and Mr. Altman. Let me talk a little bit about the Housing and Economic Recovery Act of 2008 and get your thoughts here. So we all know Congress allowed non-depository community development financial institutions to become members of the federal home loan banks. Mr. Holzclaw, what has been the impact of providing a secondary market for CDFI loans through the federal home loan banks?
Thank you, Senator. A great question. I think it's obvious to see that the number of CDFIs who have joined the federal home loan bank system has increased. When you look in 2011, you had 8. You look at 2021, you now have 67. So as we all know, that system exists to support housing opportunities and community development, much like CDFIs do as well. And so through this membership, as we talked about throughout this testimony, CDFIs are always on the lookout for affordable sources of capital. And I think that the federal home loan bank system has given our members or our industry the low-cost, flexible, on-demand capital that they need through these advances. And I think that CDFIs are able to take this capital and use it as a funding source for mortgage products for very low and low to moderate income communities. And so I think that as the banks offer their letter of credits to CDFIs to help secure these additional obligations, I think you're just going to see the numbers rise as the need or fight for capital is going to become more apparent as we move on. And so with the CDFIs becoming the shareholders of the bank, they can also earn high yielding investments and can participate in all the various programs that the federal home loan bank system provides. Like, for example, the federal home loan, the Bank of New York has grant programs that support lending for disaster relief, affordable housing, and home buyers. So I think, Senator, as time goes on, you're only going to see those numbers increase from 67 on up.
Yeah, no, I think that's great, and that's a positive, and I think it's wonderful to hear the benefits from the change in the law. But I also know that, unfortunately, the law did not permit community development financial institutions to join as community financial institutions, and that has also had an impact. And so, Mr. Altman, I appreciate the Community Reinvestment Fund support of a bill that I've introduced to allow CDFIs to pledge small business, small agriculture, and community development loans to receive advances from the federal home loan banks. So, Mr. Altman, how would the opportunity to pledge non-housing loans to the federal home loan bank affect your and other community development financial institutions?
It would be very, very helpful. We've looked over time since this opportunity to become a member of the Federal Home Loan Bank, and we've decided that we couldn't because of the collateral requirements, just not having the right collateral to meet the standards of the bank, or having the right kind of collateral to get a significant advance. So we've gone elsewhere for liquidity. Now, that said, we have been supported outside of membership by investments made by the Federal Home Loan Bank of Chicago, and I know other federal home loan banks have looked at other ways to support CDFIs. But CDFI membership, I think, would be greatly enhanced by the bill that you have introduced.
Yeah, and no, I appreciate that, because I think my understanding is just in 2008 it was a drafting error more than any opposition to allowing this to occur. And so I would encourage my colleagues to support my proposal to permit non-depository CDFIs to pledge the same collateral as other community financial institutions. And then to the chairwoman, I would request permission to place into the record the 2015 GAO report, Federal Home Loan Banks, Collateral Requirements Discourage Some Community Development Financial Institutions from Seeking Membership.
Without objection, so ordered.
Thank you. And I know I only have so much time left, but here's the other thing that I'm going to ask the panel members to help with. I think we all do, and this is a great opportunity here to see bipartisan work happening. We all support greater investments in community development financial institutions. Unfortunately, I am aware that these entities exist unevenly across the nation. There's only one Treasury certified CDFI in Nevada. In the past 30 years, we have had only 8 awards to a Nevada-based CDFI. So my question to Mr. Holzclaw is, how can the CDFI Coalition assist the development of CDFIs in underserved states like Nevada? What should we be considering? How do we bring more of those resources into a community that is underserved?
The Senator, I would say, the time I have left, obviously advocate for more technical assistance dollars for emerging CDFIs in Nevada. Also work to increase the small and emerging CDFI program, or SECA. And then last but not least, there are webinars, there are other things that emerging CDFIs can do. And I know we as a coalition have a lot of Western-based rural CDFI members, and I'm more than happy to talk to your staff to bring folks together and put you all in touch with them.
Thank you. And I'm looking forward to that, because I know about the technical assistance funds. They're just not reaching Nevada. So there's a way that we can get you your support and kind of innovation ideas about how we do this and grow this in Nevada. I would be open to that. Thank you, everyone.